Well, hello again, Solis Wealth family. Greg Solis here with our update. Lots of big news. Actually had a couple of really cool things happen. I get a call from Nicole from Hawaii, and she informs me that she wants to get baptized again. She got baptized when she was 8 years old, and she felt now that she's a grown woman, and she wanted to do it on her own. So she did it in Hawaii, in the ocean. Sent me pictures, sent me a video, and gotta admit, I got a little choked up. It was very, very cool to see. Jack was in town. He flew in town from the tour. He's been in Texas, and now he's in Oklahoma, but he came home for a week for his girlfriend's birthday, and we had a great opportunity to see him. He was in great spirits. Guy's got a lot of energy. He fills our house. I'll tell you what, but we love having him around. Of course, we had Coachella in town and Stagecoach. These are big festivals that are here in the desert. Of course, Emily loved that. She did get to go for the first time. On first weekend, she was there on Sunday, and second weekend, they do it 2 weekends in a row, she was there on Sunday. I think she has a little bit of a hack after it. There's so much dust out there, but she had a good time. A lot of people in town for Stagecoach and all that. Things are starting to calm down here in the desert a little bit, and we're kind of looking forward to it, but it's been a good season for sure. Market-wise, continues to be pretty crazy out there. The stock market, again, measured by the S&P 500, peak to trough down about 13.9%. So it's been a pretty good hit. NASDAQ off over 23%. The large cap growth index, measured by the Russell 1000 growth, off about 20%. So these are some good sized corrections. And as I mentioned last time, the bond market's been hit almost as hard in some areas. The corporate bond market was off over 12% from its high. The aggregate bond index down about 8.5%, 9%. So these are big moves both in the stock market and the bond market. And as I mentioned last time, it's rare that we get them both going down at the same time. Typically when we have a bear market and or correction, we'll have bonds going up while stocks are going down. It only happens 15% of the time when they're both down together. However, again, most of this is being driven by some of the, fears out there. There's inflation fears, there's fear of recessions, there's, obviously geopolitical concerns with what's going on with Russia and Ukraine. And so some of these things are true headwinds that are causing some problems. Most of the things that we're seeing in the slowdown of the economy come from the supply chain issues and imports and exports, things like that are where we're seeing the slowdown. But consumer spending still looks pretty strong, and some of the places that we think are more important, like housing, are still pretty strong. So we do not see us slipping into a recession in 2022. As a matter of fact, we anticipate a 2.5% to 3% GDP growth for 2022. It's rare that we have a recession it's rare that we have a bear market during recessions. So it's happened. It happened last time it happened was in 1987. But we're expecting that the economy is going to continue to remain strong. There's still a lot of cash on the sidelines. Corporate balance sheets still look very strong. Corporate earnings still look strong. So there's some reasons to believe that we're going to pull out of this thing. And particularly if the Fed could slow down the economy a little bit, we're anticipating that we'll see inflation start topping out, the economy remains strong, and hopefully things will get back to a little bit normal. So hang in there. It's been a challenging time for sure, but overall things are holding up well here. If you have questions, don't hesitate to give us a buzz. We're here for you. Take care and God bless. Bye-bye.